Welcome to the monthly report from the world of finance and economy. In this video, I will provide you with important news that affects world markets and the economy. My aim is to bring you relevant information and help you find your way in this complex world of finance. I hope this video provides you with useful information. But before we start, I want to tell you that I am not a licensed investment service provider and my videos are not investment recommendations or financial advice and should not be treated as such. If you want to support this channel, you can find the link in the video description. The stock market was shaken by news of the American bank Silicon Valley Bank, whose collapse the media describes as the biggest fall of an American banking institution since 2008, that is, since the last financial crisis. Silicon Valley Bank announced it needs $2.25 billion to strengthen its balance sheet. SVB got into trouble because it had to sell bonds for $21 billion, which is an indirect consequence of the increase in interest rates by the Fed, because their value began to decline inversely from the previous yield. The forced bond sale cost it $1.8 billion. When the information about this loss became public, the so-called bank run, according to media reports, before its collapse, clients were able to transfer $42 million from them. SVB ranks among the big banks. It was among the top 20 in commercial banks in 2022. Her clients are many venture capital firms and startups from Silicon Valley. For example, Shopify and Pinterest should also have money with this company, but also the company Circle, which is behind the stablecoin USDC, for example. As for the deposits of SVB clients, they are only insured up to $250,000 million. This is the amount that all clients will receive and should be paid at the beginning of the new week through the FDIC Santa Clara branch. Uninsured deposits, however, return the last value, 95% of deposits. It can be up to $150 million. Troubled Silicon Valley Bank to be bought by First Citizens Bank and Trust Company as of December 31st. First Citizens Bank was the 30th largest bank in the U.S. and half the size of Silicon Valley Bank. Today's deal will place it among the 25 largest banks in the U.S. by assets. The U.S. Central Bank, Fed, and the U.S. regulator the FDIC, which is assisting in the administration of failed banks Silicon Valley Bank and most recently Signature Bank, announced that they will make available financial resources to secure all taxpayer deposits in these banks, including those that they are not insured. The American Central Bank also made a separate year, which on Sunday announced the financing project for American banks worth $25 billion, which is aimed at securing banks and other depository companies. These funds are supposed to ensure enough liquidity to cover the needs of customers in times of unrest. When there is speculation about the risk of bank runs, the Fed's tool will offer loans up to 1 year to banks, savings and credit unions and other institutions. Those who use it will be asked to provide high-quality collateral, such as government bonds, agency bonds and mortgage-backed securities, to back it. American banks have already borrowed $53.7 billion through the BTFP tool, Bank Term Funding Program. These are loans for a year. Through the credit extension to FDIC Bridge Bank tool, the Fed has already provided banks with $179.8 billion. This tool serves to bridge the gap between the failure of the bank and the implementation of a proper solution for the liquidation of the assets of the bankrupt institution. Although it is not officially presented that way, some refer to these tools as a new form of money printing. Smaller American banks saw an outflow of $120 billion, while large ones such as JP Morgan and Wells Fargo saw an increase in deposits of $67 billion. After these withdrawals, the total value of deposits in American banks fell to just over $17.5 trillion, while the aforementioned withdrawals represented approximately 0.6% of total deposits. However, it is interesting that bank deposits have been falling for a longer period of time over the past year and have already fallen by $582.4 billion as of February 2022. The U.S. Central Bank tried to tame inflation by raising interest rates and also by reducing the volume of dollars in circulation through the so-called quantitative tightening. However, looking at the Fed's current balance sheet, this method is probably becoming a thing of the past. The so-called quantitative tightening is the opposite of qualitative easing, through which the Fed supports economic growth by printing new money in popular terms. Through quantitative tightening, the Fed tried to reduce the balance sheet in order to weaken inflationary pressures. After the outbreak of the U.S. banking crisis, quantitative tightening is losing its effect, as the Fed's balance sheet has increased astronomically in the last 2 weeks. The Fed's balance sheet grew by about $400 billion. The balance sheet is currently at $8.73 trillion and close to $8.95 trillion, which was the all-time high before the start of the quantitative tightening program. 2/3 of the effect of quantitative tightening over the past year, by which the Fed reduced inflationary pressures, was eliminated in just 2 weeks. U.S. Senator Elizabeth Warren suggested that Fed Chief Jerome Powell should resign from his position and that Michael Barr should conduct an independent investigation into his previous actions. According to Warren, Powell was the leader of deregulation at the Fed, which may have contributed to the collapse of Silicon Valley Bank. Warren is therefore calling for a thorough, transparent and swift review of his activities. The Fed headed by Chairman Jerome Powell made the decision to raise interest rates by 25 basis points in March, which was in line with expectations. He thus brought them to the level of 4.75 to 5%, which is the highest level since 2007. Overall inflation, CPI, rose by 6.0% year-on-year as of February. Inflation in the USA was the highest above 9% in June 2022. On a month-on-month basis, the CPI rose by 0.4%. American billionaire Elon Musk has been warned by the official Chinese media that he is risking his good relations in China after he retweeted reports arising from American documents, according to which it is possible that the COVID-19 virus was caused by human error within laboratory research in Wuhan, China. The warning comes shortly before the U.S. Congress is set to address the issue of alleged Chinese spy balloons over U.S. soil, further raising tensions between the U.S. and China. The spread between the 2-year U.S. Treasury yield and the 10-year yield widened to nearly 100 basis points on Tuesday. At such a high level, this spread is the largest since September 22, 1981. The 2-year yield is currently at its highest level since 2007. According to many analysts, this inversion is a signal of the threat of a recession, which is also indicated by historical data, which warns that recessions have often occurred at the time of this inversion or after it began to return to its normal state. Europe. According to the Statistical Office, unemployment in the Eurozone remained at 6.7% and within the European Union at the level of 6.1%. Inflation in Great Britain rose from 10.1% to 10.4% year-on-year. The German Consumer Price Index, expressing the current inflation in the country, reached a decrease of 7.8% year-on-year, which is a significant decrease compared to a month ago, 8.7%. At the month-on-month level, inflation in Germany grew at a rate of 1.1%. Contributing to the growth are still high food prices, which rose by 22.3% year-on-year. Spanish CPI, inflation, is at the level of 3.3%, while a month ago it was at the level of 6.0%. The month-on-month inflation was at the level of 0.4% growth. The British Central Bank, the Bank of England, raised interest rates by an expected 25 basis points to 4.25%. Inflation in the Eurozone fell to 8.5% year-on-year from January's 8.6%. According to Prime Minister Elisabeth Borne, the French pension reform should go through the approval process, because she believes that they will find a majority in Parliament for it. The pension reform from President Macron's workshop, which will raise the retirement limit to 64 from 62, is facing great public criticism and many massive protests. Shares of Swiss banking giant Credit Suisse are at historic lows. Credit Suisse admitted it had deficiencies in its financial statements for the past 2 years, but said the final figures show the correct state of its financial health. The bank had to delay the publication of the production report because the SEC asked it to provide it with statements related to the management of the years 2019 and 2020. Credit Suisse's accounting method was also questioned by the audit firm PwC. The second largest Swiss bank and the banking symbol of this country, Credit Suisse, will finally be taken under its wing by its competitor UBS. UBS will pay $3.2 billion for Credit Suisse, while the Swiss National Bank will contribute up to $100 billion in liquidity support. The central bank also provided a guarantee to absorb losses of up to $9 billion on certain assets above a predetermined threshold to reduce any risks to UBS. Under the terms of the deal, Credit Suisse shareholders should receive 1 UBS share for every 22.48 Credit Suisse shares they own. Credit Suisse was among the 30 largest global banks and is considered systemically extremely important. Just to illustrate, Credit Suisse's balance sheet at the end of 2022 was approximately twice that of Lehman Brothers, the bank whose bankruptcy in 2008 was the definitive trigger of the financial crisis at the time. Only a few days have passed since the complicated situation of the Swiss banking icon Credit Suisse was resolved, and a dark cloud is hovering over another European banking giant. This time it is the German Deutsche Bank. The German banking giant is another big player in the financial sector, in connection with which there are growing concerns about its very existence. Insurance against their failure is on record. Deutsche Bank is the most important investment bank in the EU, which is the only one from the Union to belong to the first league of world investment banking. Like the fallen Credit Suisse, Deutsche Bank at one time succumbed to big dreams and wanted to compete with the biggest investment banking giants, which are mostly Wall Street giants. She broke her teeth on it. Similar to Credit Suisse. In both Credit Suisse and Deutsche Bank have been dogged by frequent scandals, crises and setbacks over the past 10 to 15 years. Perhaps somewhat surprisingly, the European Central Bank raised rates by up to 50 basis points, bringing the base rate to 3.5% and the deposit rate to 3%. According to Eurostat data, wages in the Eurozone rose by 5.7% in the fourth quarter of 2022, which is the highest growth rate since 2010, when these statistics have been monitored. However, the growth of wages still did not compensate for the growth of inflation, which at the same time grew by an average of 10% in the Eurozone. Wage growth, although it seems to be a positive thing, is also problematic. The high pace at the time of inflation pushes prices even higher, creating unwanted inflationary pressure. The ECB, like the Fed in the USA, wants to see a slowdown in this direction, which will also be positive for inflation. Asia-Pacific region. In 2022, China was able to export 2.5 million vehicles, thus catching up with Germany in the ranking. Japan remains in first place. Germany and the European automotive industry are paying extra for chip failures, while China is increasingly scoring points in the field of electric cars. China's Consumer Price Index showed that inflation in the world's most populous country is at the level of 1% year-on-year growth. Japan's GDP grew by only 0.1% in the previous quarter, which was mainly due to weak private consumption. The Bank of Japan is unlikely to change its ultra-easy monetary policy during its next meeting, according to a Reuters poll. It is expected to leave the benchmark interest rate at -0.1%. Industrial production in China rose by 2.4% month-on-month. Retail sales grew by 3.55%. China's central bank left the one-year medium-term lending rate unchanged at 2.75%. Japan's February CPI fell to 3.3% from a previous 42-year high of 4.3%. If you are interested in multi-level marketing or want to buy some products or support this channel, there is a link on Amway in the. If you like the video, give it like, subscribe and turn on the bell. And don't forget, money is freedom. And keep learning.